Okay, welcome back, everyone. We're going to get right into the stock market technical analysis, go through what I'm seeing in the charts. I'm just going to get right into it today. So, triple Qs, guys, we have a resistance line to watch right here. It's about 269.70, 270, somewhere right in there. That's kind of a key level. You can see here, that's your June lows from back in this June. There, we hit right there. That was support. We kind of held it right through here, held it through there, and then we're below it now. So these are back tests of resistance until they so there's kind of two takeaways. One, we're back testing resistance. If we get rejected right here and now, or sometime this week, basically, then it's very, very high probability we're going down to our final target on triple Qs, which right now is about 240 to 238. Okay. So that's the downside. Now, if they can pop this and we start getting daily closes above this 270 area, then all this price action is going to prove to be a false breakdown bear trap. All right. We do have bullish divergences on the RSI on the daily chart. All right. So understand that there are bullish divergences there. So it's definitely looking like this could be a bear trap for sure. I definitely have to assume that. But that doesn't mean divergences aren't a reason that you're not going, it's not a buy signal. Okay, so if we get rejected here, we could run down and hit those final targets and maybe even keep the divergences. Moving to the hourly chart. Okay, you can see that basically we are pretty much just right at that area, testing resistance all day today. So they gapped it up, and Friday I talked about how we closed on support. So, we could gap up, and I did talk about that. And sure enough, I was looking for a move down, but, they gapped it up. It was, it was a very kind of 50-50 pattern there where I wasn't sure if it was going to gap up or down. I figured it would gap, but I didn't know if it was going to go up or down. They gapped it up, and we're there at resistance. Okay, so we start to break above 270, start getting hourly closes and especially daily closes above that, then that tells me that we could rally. Looking at the daily chart, we also have that bullish engulfing candle right here from last Thursday. On Friday, we did not get any confirmation, and then today we're kind of pushing up near the high. So again, if we continue to rally from here, it's likely setting us up for a bear market rally. And the near-term areas of resistance will probably have a little reaction right in here around 279. And then another level of resistance, 291.80. And then the final resistance area would be the downtrend line in this bear market. All right, that's on the daily chart. So somewhere up here at 310 or something like that. So that's the upside potential. Those are levels to watch. And that's, kind of giving you an idea of, when to react. And so, yeah, that's it. On the downside, that 238 target, that's kind of what we're looking for. So as of right now, I'm staying short. I'm at resistance, and I'm going to hold on to that resistance. If we start to break out, then we'll start covering and maybe look to start going long. Okay, so that is it on triple Qs. And really, it's just as simple as that. It's, we could go up, we could go down. There's key levels to watch to give us a signal on where the probability might lie. I'm treating it as a backtest into resistance right now. We're in a longer term downtrend, treating it as a backtest into resistance, looking for that 238, 240 target, looking for a spike in the VIX. This is we've cleared out a lot of the stops, I think, with the price action the last couple of days. So if we're going to kind of crash down to that 238 area, you should see a spike in the VIX, and that might signal a near-term bottom. But right now, I don't see any signals of a near-term bottom. All I see this is a break of support at 269, and we're backtesting resistance, soon to be rejected. But if we go up, stay flexible is all I would say, because at the end of the day, I don't know where we're heading. All I know is key levels where we're getting reactions and how to, what I'm planning on doing to take action when I see certain levels get taken out or confirm. Okay, gold. Nothing really going on in gold today. So that's the thing. I'm looking at gold, we're still kind of downtrending here in gold. When I look at the dollar futures, a little bit of a breakdown for sure in the dollar. I would say that's probably a breakdown. We kind of had support right about 112. They chopped through it a little bit, but we had bullish divergence on that breakdown. We're breaking it now, and we are taking out, any divergences. So looks like the dollar's probably going to continue downtrending. If I go to the daily, we've got a major trend line to watch here on the dollar. Okay, so there it is. So I suspect we're going to work our way down to that trend line. All right, maybe that's bullish in the short term for stocks if the dollar's falling. Until we break this trend, though, the dollar's still in an uptrend. Also, do note we do have negative divergence on the daily in the dollar. So, the way I think it's going to go is you're probably going to come down, hit this trend line, get a bounce, and then break the trend line. But until we see a break of trend, there's just, nothing from my perspective to really trade here on the dollar. TLT. Someone asked me why TLT is relevant for triple Qs and the tech stocks. Tech stocks are very interest rate sensitive. They essentially are competing with safe haven treasuries. So when you can't get any yield on a treasury, which is kind of a guaranteed yield because it's it's a U.S. treasury, they're pretty much the safest instruments you can get. When you can't get any yield, then you've got to go into growth because there's no safety, no yield. So everybody piles into growth. But when interest rates are rising, they compete with stocks, especially the growth stocks, because right now you can go out and get a treasury bond, and I think the 2-year or the 5-year is yielding 6-7%, something like that. So you're guaranteed that, and in growth, a growth stock, what are you guaranteed? You're not really guaranteed anything. So they compete, and so as interest rates rise, it puts pressure on tech. Okay, so TLT, looking at our treasury bonds, kind of the long bond, 20 plus years, still in a downtrend, no change here. So to see the tech stocks rallying today and the bonds are kind of continuing in this downtrend just gives me pause. I think that I just don't think triple Qs is going to continue to rally if the bonds are continuing to sell down. So now, if we see a change in technical posture here, we get some sort of a reversal or a break of this downward channel and interest rates start coming down, then we're likely going to see a rally in tech, but we don't see it now. So again, I just continue to remain short on the tech trade. Okay, First Solar. All is good in shortville. So continuing to short this stock. Again, I suspect, this last divergent high that we had right here, I've been talking about how I thought that was probably the end of any kind of uptrend and we were about to start a new downtrend. So far, you can see we've got lower lows, okay? And we don't have a lower high yet, but we've got lower lows. So it looks like we're starting that downtrend. We'll probably get a rally and make a lower high. And we're going to continue that downtrend as far as I can tell. So we are breaking. If I look at the hourly chart, there was like minor support right here. It's about 120. We could still hold that, but you can see we have several reactions right here. So maybe this is a brief undercut and we're going to hold and maybe get a small little bounce. But this thing's just kind of getting started. I think it's got a lot more downside. I'm not looking to really game this little bounce. It's just not that clean of support. You have some reactions there, but just not that many. Now look at the daily. We've got this huge gap to fill. So everybody sees this gap. It's very obvious. So I suspect we approach that gap. And that's really what I'm continuing to trade for or play for. I think we head lower, maybe a little bounce there, head down, get down to the gap entry, probably enter the gap, and we'll look to cover the short trade as we enter the gap. I am not going to hold out for the gap fill, which is at about 77, 75 or so. The gap's just way too obvious, so I'd be looking to cover my short ahead of that. And that remains the play. So I've been kind of walking you guys through this one step by step. Again, the short, we really entered the short right here on Wednesday, October the 5th. All right, that was our sell signal. If I can get the right tool, right there, that candle, okay? And it's been down ever since, little bumps here and there. And, a lot of people that are my subscribers, every little counter move that bounces there. Oh, how's this one looking? Guys, you have to be able to give trades, if you know, give trades time to play out, all right? And if you can't handle little tiny moves against you, if the technicals are still good, then you're too heavy in the position, all right? That's the only advice I can give on that one. Now, looks like we're heading lower so far from the entry. Even if you got it at the very end of the day, this thing's profitable by about 12%, and I think there's a lot more to go. I think we've got, you know, probably another anywhere from about 30% to 25% more downside. Tesla's kind of at support. You know, we had some support here at 207. I pointed that out. You can see some reactions right in here. All right. And then just recently there's support and support. So we're at it now. We're at support. We have earnings coming up next week on this one. Earnings is coming out on the 19th, or actually here in a couple days, I guess. So, you know, this is, you know, can be a crapshoot a little bit ahead of earnings. I suspect we're going to continue lower and break down. But, you know, it's, again, it's right before earnings. So it's really tricky to say this is exactly what's going to happen right after earnings. I'm looking for more downside. If the Q starts to break out and things look bullish, then perhaps, you know, this is going to rally on earnings. But I have a feeling it's going to break down and at a minimum head down to this target right here, about 184.75 as our next level of support. Possibly dip down to this 173 downtrend line. All right, we have a possible trend line right here. I only have 2 reactions, so I can't validate it as a trend line. But this is good support, 184.55, 185, all right? You can see we've got lots of reactions here on the daily chart. I think we dip down there, probably get a bounce down in that area. Snow. So Snow has a downtrend line. This is your bear market in Snow on the daily chart. Lots of reactions there. You can see right here we had 1, 2, there's another one. All right, and then we also have some horizontal resistance here at 165.90. Okay, I've got lots of reactions right there at that level. So we're at resistance now. We're backtesting that right there. So that's objective to short. Now, if it breaks out, it's probably going to run up to the trend line. Okay, and then that would be an objective area to short. But we're at resistance right here, and I suspect we get rejected and, you know, start to head lower. But again, it depends on what the triple Qs does. If triple Qs rallies, it's going to lead the rest of the tech stocks up. That's just the nature of the, you know, of the big, you know, the big FANG stocks. They kind of lead the market around. So that's it. That's all I see there on Snow. It's objective to short here, and we'll see if we can get a rejection and a continuation to the downside. Qualcomm. So Qualcomm, you know, on Qualcomm, we've got this gap, and I really think we're going to go fill it. All right, that's this again. Qualcomm's very similar to triple Qs. It's going to do what triple Qs does. So if we get rejected in triple Qs now, then Qualcomm has a very high likelihood we're going to trade down to our final target, which is about 94-ish. There's a gap. See that gap right there? Big gap back in July 2020. This is a daily chart. Also, you've got, that was resistance right through here. So that should be good support right there at about 94. All right. We also have a potential trend line right here, support. There's just lots of support, potential support areas down at that 94. So from my perspective, it does look like it's going to make that final push down. From where we're at right now, that would be a drop of about another 15%. So that's consistent with that crash kind of setup with triple Qs. And if triple Qs does go down to hit those final targets, I suspect Qualcomm will be down there as well. The other thing to note, though, is we do have bullish divergence just starting to build on the RSI and the PPO. There it is. So we do have a divergent low right here. That was a divergent low. That was a bullish engulfing candle. We don't have any confirmation, but we definitely have a bullish setup because we have bullish, you know, the divergences are bullish. We have a bullish candlestick. So, you know, again, if you're unsure, maybe taper down your position size or just go flat. You know, there's no harm in just missing something if you don't know. If you're profitable, you could take profit. Or if you think we are going to get that kind of final push down, then you know how it goes. And as of right now, you know what I think. You know, I do think we are heading down there to hit those final targets. So that's all I got on that one. Okay, that's all I have, guys. So if you haven't checking out the course, take it if you're interested. Link in the description below. Private member group is doing really well and growing, and I think there's a lot of interaction and value to that. So link in the description on that one if you're interested. And I'll catch you guys tomorrow. Bye.